Hello traders, good morning. On this video, I'm going to take you through the analysis of the market. And there are two major types of analysis, namely technical analysis and fundamental analysis. But for this short video, I'm going to take you through technical analysis. Okay. Now, technical analysis is the analysis of the past market action in order to predict the future market direction. So you should have data information to analyze, and of course it's on the chart. So if you look at the chart, the left hand side of the chart is past data. Now this is the chart. The left hand side of the chart represent past data. So this is data used to analyze what will happen in the future and in the present. Okay, so let's jump right into it. But before now, you should already know that this first icon here is called the market watch. Okay, and these are the instruments available to trade. As you can see, any of the instrument that has blue at the top right, this top left here, means that there is a trade running on it, and of course the trade is on profit. If it's red, the trade is on negative. So as you can see, there's a trade running here, and there's also a trade running. So this is a market watch, and this second icon here is called the chart. Okay, and the third icon here is called the terminal or the trade. As you can see, I have running trade. Okay, and this is the account history. Okay, quickly, let's jump right into it. So the first thing we're going to do is to start deploying our technical tools, our technical indicators. Okay, now technical analysis is almost impossible without technical tools. Of course, you know, in every field you are as good as the tools available. So let's look at the tools. Let's start deploying the tools into our chart. Then afterwards, we can now start explaining how we can use the tool to spot out market opportunities to buy, and also opportunities to sell. All right, so please, I don't know if I'm too fast. You can also, you can pause and replay it again. Okay, now let's jump into our chart. So this is the chart, so we're going to do it from the chart. So probably your chart is looking like this. As you can see, I am on USD CHF here, H1, which you can be on any chart. You can be on any instrument and set and deploy your technical tools. Okay, now probably you're having only one line on your chart. So this line is called moving average. So there are two major categories of technical tools. We have the leading indicators, and we have the lagging indicators. Okay, so we have the trend indicators. We also have the reversal indicators. So we're going to deploy the moving average. Moving average is under the trend indicators to tell us the trend of the market, which direction the market is going. By trend, I mean to know the direction the market is going. And also we are going to deploy our MACD, MACD, meaning moving average convergence divergence. That will tell us the momentum of the market, and also when the market is about to reverse, which is very important in trading. So probably your chart should be looking something like this. So from here, you can see I've already colored my candlestick to green and red. Okay, I want to believe you already know how to do that. Okay, so red indicates bearish movement. You can see that the market has been falling. Green indicates bullish movement. Okay, now probably you have just one moving average. So let me quickly show you how you can do that. The first thing you need to do to deploy your technical indicators, to add your technical tools to your chart, is you click on this F at the top, the mid top of your screen. It indicates, or it means indicators. So this F means indicators or add indicator. So you just click once, so you take it to somewhere like this. Probably you have just one, you have just a moving average here, or even if you don't have any moving average here, you have to click on this plus to add moving average. But if you have one, let's start with this one we have. So the first thing we're going to do is to click on the moving average you have there. So probably you have other tools here. So if you have other tools, you have to click, you have to long press on it, and you will see the option delete it, so that you have just this. Okay, so let's start with this only one moving average here. So you click on it, it opens up, right? It opens up. So you fill in, or you change these parameters to the parameters we have tested over time and we found to be giving us good trading opportunities. So the period should be 200 period moving average. Okay, then the shift should be 0, right? The method you have to use, the type of moving average should be exponential. Then you apply to the closing price. As you can see, there are other prices here, but we choose the closing price. The method, there are other methods here, but we choose the exponential. Okay, then style should be 4 pixel, 4 pixel here. Then the color should be black. Okay, afterwards you click on done. So that this one now is the first moving average we have added. Then we're going to add the second one again. So to add the second one, we're going to add the second, the third, and the fourth one. So 4 moving average. That makes it a crossover kind of moving average. So we can use this moving average to spot out the trend of the market, which is very important in trading. So the next thing we're going to do now is we're going to click on the F again to add the second moving average. So you click on the F. Normally you should be showing you something like this. Remember, we've edited this one, we've added this one. Okay, so you click on this F with the plus. It means add a new or deploy a new technical tool. Okay, so you click here, it opens up something like this. So these are the array of technical indicators we have on MT4. So the one we're looking for is moving average, and that is the 5th option there. So you click on the moving average. So after you click, then you change the parameters. So the parameters you're going to use is the period now should be changed to 50 period. Okay, the shift should still be 0. The method should be exponential. The method should be exponential like this. Then apply to the closing price like this. Okay, which is very simple to do. The style should be 4 pixels, then the color should be changed. So you just click this color here, you see the color palette, you change it to red. Okay, then that's all. Very simple. So you click on done here. So the second one has been added. As you can see, this black one is the 200 period moving average, right? This red one is the 50 period moving average. So that's the second one. We're going to add the third one. To add the third one, this is what you do. You click on the F again, which is now a routine. Okay, very simple. So you click on the F again. So we have just 2 moving average. The next thing you're going to do, now you're adding this moving average under the main chart. So you click on the F with the plus here. Then you click on moving average again. Then right now, you're going to type the period here should be 34. So the period should be 34. The shift should be 0. Method should be exponential. Apply to close there. Okay. Then style should be 4 pixels. Color should be a green color there. Then you click on done. So we've been able to apply, as you can see, we have been able to apply 3 moving average to our charts. They're going to apply the fourth one. So the fourth one, you do the same thing again. You click on the F here. Okay. Now you click the F with the plus here. So after that, you look for moving average here. Then right now, you're going to change the parameters. So the parameter we're going to use should be 20 period here. Then shift should be 0. Method should be exponential applied to the closing price. Okay. Then style should be 4 pixels. So if your own is something else, you just change it to 4 pixels here. Then change the color to blue. All right. Then afterwards, you click on done there. So right now we have 4 moving average here. Okay, so this is the 4 moving average we normally use to spot the market opportunity. Now, but that's not all. We're going to add our momentum indicator and a reversal indicator, and that is the MACD. Okay, so follow me again. So you click on this F here. Okay, as you can see, you click on the F here. We are still on the chart area. Then you click on this F with the plus. Okay. Then right now you carefully look for MACD. MACD. So you go down. So it is under these oscillators, as you can see, MACD. It stands for moving average convergence divergence. So this is the technical tool we use to know the momentum of the market. You know, momentum is force that move the market either up or down. So we can use it to know the momentum and also use this to know when the market is about to reverse or to change direction. okay, which is very good for profitable trading. Okay, so you click on the MACD there, then you change the parameters. So the parameters here, so the fast EMA on it, change the parameters. This has to be 12. The slow EMA, this has to be 26. Okay, 26. The MACD simple moving average SMA should be or will be 9. Okay, so apply to closing price here. Then you come down here to the main should be 2 pixels, color blue here. Then the signal should be 4 pixels. So you click and change it to 4, and the color should be red color, of course, should be red there. Then you click on the level here. So you just click on this level, as you can see, just click on the level, as I've done my own. And after that, okay, sorry. So after that, it opens up something like this for you, right? So the style should be 4 pixels there. The color should be black there. Then you go back like this and you click on done. So this is what we have just added now. This other part. But then we are not still done. We're not still done. The next we're going to do is also to go to click on the indicator icon here again. Okay, then you come under this indicator window 1. Of course, that's where we have the MACD. Now you click the F with the plus, not this one, please, not this one. Now you're going to click the F with the plus by this indicator window 1 here. So you click this F with the plus, right? Now you look for moving average. Okay, so we want to add a moving average attached to the MACD indicator. Okay, all right. Now that makes it a complex form of MACD. So that's what we're going to do. So the parameters for this will now be the period will be one period. The shift going to be 0. The method will be smoothed. So you come here, look for smoothed. Okay. Now apply to, you click this arrow here, not going to be closed. You're going to apply it to first indicator data, as you can see here. So you click. Then the style will be 4 pixels. Style will be 4 pixels. Then the color will be green color there. Okay, so you click this level here. You click the level there. Okay, so this is okay for it. Then you click back. Then afterwards you click on done there. So you're going to have something like this. Fantastic. Congratulations. So we have been able to deploy our technical tools. Now let's see how we can use this to spot market opportunities. But the first thing we're going to do is, for you to use any tool, you have to do what we call back testing. So you have to check if this tool you want to use, how well has it been working in the past. And of course, we have past data here, so we can use the past data to analyze how well this technical tool has been working. Okay, now let's start with the let's do some explanation on this moving average. Now this black one here, the black moving average, as you can see, is the 200 period moving average, and that is the slowest of all of them. Now for you to trade profitable, you will need a slow moving average and a fast moving average. So combination of this slow and the medium and the fast will give you will help you to spot good market opportunities, and also tell you when the trend is about to turn and when the trend is going in a particular direction. All right, so this black one is 200 period moving average. Okay, now this red one here, as you can see, I'm pointing on it. This red one is the 50 period moving average. Okay, this green one here is a 34 period moving average. Okay, this blue one here is the 20 period moving average. That means this blue one is the fastest of all of them. So we use all of them, okay, to trade, and I'm going to show you how to do that. Then so let me show you how we can be able to use this to spot market opportunities. Okay, so the first thing you need to bear in mind is now look at the candlesticks. Look at the candlesticks, please. Now, the 200 period moving average, of course, is our biggest and our slowest moving average. So we can use that one to spot the major trend of the market. Major trend. By trend, we mean a definitive pattern of price movement, which indicates either upward or downward. So we use this 200 to spot the major trend. By that, I mean, if the candlesticks, as you can see here, if the candlesticks is found below, if the candlesticks is found below, as you can see here, if the candlestick is found below the moving average, that indicates that the price is about to go down. If the candlestick is found below the 200 moving average, it indicates the price is about to go down. Okay, price is about to go down, and that we call that the downward trend. So we look for selling opportunities. Okay, now as you can see all here on this USD CHF, as you can see all here, the candlestick is found above the 200 moving average. That indicates an upward trend. So we look for buying opportunities, as you can see. Now, please don't forget to look at the dates down here. Each of this column, as you can see, from here to here, 1 column, 2 column, 3 column, they all represent activity on the market for 1 day, 1 day. So from here to here is 1 day. From here to here is 1 day. Okay. So as you can see, all of these days, the candlesticks has been found where? Above the 200 period moving average. That indicates that the price has heavily been going up all this while. On 6th May, 9th May, 10th May, as you can see. So all this while, you're only going to be buying USD CHF, not selling, buying. That's how to make profit on the market. So you can imagine, just follow me, please. So you can imagine right from here, okay? You can imagine this is where the candlestick is found below the 200. Right from here, which day is that? 5th of April. The candlestick is above buying opportunities. Now, as you can see, it came down slightly below it, which means you stop buying, right? Then it came again above. Okay, let me zoom in so that you can see. It came again above the 200 period moving average. You look for buying opportunities. Now, while looking for buying opportunities, you want to make sure that you are buying at the very right time. The very right time to enter is to enter when the candlestick itself is above the blue moving average, which is the 20 period moving average. Okay, now for the fact that 1, 2, 3, I mean this blue one and this green one and this red one, see the way they are fanning out. By fanning out, I mean see the way they are all spaced equally. It indicates a very fine movement going upward. So you have to look out for buying opportunities. Okay, buy opportunities. So you want to buy when the candlestick is now found above the blue moving average. So just citing this green candlestick, you want to place a buy. Why? You are buying because of, first off, the candlestick itself is above the 200 moving average, which indicate upward momentum, right? Or upward trend. And also you're buying because it is now above your fastest moving average, which is the 20 period moving average, the blue one. All right. So if you understand this now, let me explain the MACD here. Now, this MACD is both a momentum indicator and a reversal indicator. How does it work? So let me quickly show you how it works. So MACD stands for moving average convergence divergence. Okay. Now, if you look at it very well, it has bars. These are the bars. These blue lines, they are all the bars. These bars are called histogram, and they build above a zero line. So this middle line is called the zero line. So this middle or this line here divide the MACD into two. So we have the up part and the down part. Okay. I don't really want this video to stay long. Okay. So I'm trying to be fast. Okay. So that it not consume much space while you're trying to download it. Okay. So it has the upper part and the down part. Okay. So the MACD, if you have these lines building above the zero line, it indicates a bullish momentum, right? If you have these lines building below the zero line, it indicates a bearish momentum. So you look for sell opportunities here. Here you look for buy opportunities. I don't know whether you get it. So you look for buy opportunities here, right? And look for sell opportunities here. So fantastic. So you notice before you can buy, like I explained earlier, before you can buy, candlestick, a bullish candlestick above your moving average is fine. Now let me use this tool. Can you see this tool? This tool is called crosshair. So I can use that to draw a straight line to measure. So let's say look at this candle. So I am on this candle right now, this candle right here. So you can see right from there straight down, you can see that the MACD, the histogram bar, is already above the zero line, which indicates, so MACD is already telling us bullish momentum is coming to play, right, on the market. And then the candlestick is also telling us bullish momentum is also coming to play because the candlestick is above our moving averages. So this is a very right opportunity to buy. Okay, so if you buy here and then afterwards the market move up, you make profit. Can you see that? Now, if you buy at this point, your stop loss, oh, it went back again. So let me go back to where we were. So we're here, please. So if you buy at this point, right, your stop loss is going to be below the 200 period moving average. Somewhere you put your stop loss here, you're buying here. So from here, if you place a buy here, right? So let me use this tool for that. Let me use this horizontal line. So let's say you place a buy. It moved again. So let's look for that same spot. Okay. So let's say you place a buy somewhere at this spot. I'm using a line to demonstrate. So let's say you place a buy somewhere here, right? Somewhere at this spot. Why are you buying at this spot? You're buying at this spot because the candlestick here is above the 20 period moving average and also above your 200 period moving average. So that's a buy opportunity. If the candlestick were below, it would have been a sell opportunity. So you're buying here, right? Now at this same spot, you can see that somewhere around here, you can see that the MACD is also above the 200 period moving average, right? It's also above the 200 period moving average. And also this green line here is above this red line here. The green is above the red, bullish momentum, right? So you can see the green just crossed above the red here, and the MACD bars, this blue bar is above the zero line, buying opportunity or buying signal. Then also your candlestick is above your moving averages. So that's a buy signal here. So if you place a buy here, your stop loss should be somewhere here below the 200 period moving average, somewhere here, right? So this is a good place to put stop loss, right? Risk mitigate, and this is also a good place. So, but this place will be very far from the market price, so you want to put it very close here, around here. So if you put your stop loss here, your take profit is going to be this same distance to be 1:1, or times 2 of this distance, which means 1:2. So if you're just imagine your stop loss to be here, then your take profit is going to be somewhere above, somewhere at this level. So you can see that the price actually moved up to get to that level. All right, now everything we're doing now is on H1. So this, what we just did is on H1. So you can still do the same thing on a lower time frame like M30 and 15 minutes. Now, if you go down the time frame, you're going to see more opportunities there, right? You're going to see more opportunities, but you can combine these time frames to get good trading opportunities. So let me go down to 15 minutes time frame. We can also spot opportunities on 15 minutes time frame. Okay. So we can spot opportunity on 15 minutes time frame. So I'll just click anywhere on my screen, on my chart, and click 15 minutes there. Okay, so let's look at for some opportunities here on 15 minutes time frame. Okay, so on the 15 minutes time frame, just as I've explained, it also works here on the 15 minutes time frame. Remember, candlesticks below this 200 moving average, you want to look for sell opportunities. You don't have any business buying, only sell opportunity. But when is the right place to sell? You are to sell when you notice, since you want to sell, the red candle is your best bet. Okay, so you sell when you notice a red candle, right? This one is a perfect one. You notice when you have a red candle that is formed below the 20 period or the blue moving average, this blue one. So you see this red candle below this blue line, and at that spot where you have the red candle, this spot where you have the red candle, as you can see, the MACD is already forming below the zero line. That's a sell opportunity. I've explained buy opportunity earlier. This one is a sell opportunity. Okay, so once you sight this candle, you want to sell. Where are you selling? You want to sell immediately this candle close. So you have set a red candle or a bearish candle fully formed below your blue moving average or your 20 period moving average, and of course it's below all the other moving average. So you place a sell here, place a sell order here, here. So you place a order here, you're optimistic that the price will go down. So let's look at this now. So you can see what we're analyzing is 18th of May, okay, just a few days ago. So which means you can really make good profit with this strategy. So let me show you this now, please watch. So you can just touch anywhere on your chart area. This icon here is drawing, okay? So you click this plus, let's use horizontal line there, okay? So that was 18. So let's draw the horizontal line here. So you can see this is the exact spot I'm talking about. So you sell when you sell at this very spot. Once this candle close, you place your sell here. So let's say you're selling here now. So you're selling here, right? And the price, excuse me. So you sell at this very spot, fantastic. So the optimistic price will go down. The momentum is bearish. It wants to go down. Okay, fine. You want to make the money, and so the next thing you're going to do is after that, you will now place your stop loss. I've explained how to set stop loss and take profit on other videos, and I'm sure you must have downloaded it, okay? And if you have not downloaded it, please ask for the link to download my video on setting stop loss and take profit, okay? So after you must have placed the sell trade here, okay? So let me show you where you put your stop loss. The same thing, let's go and pick another horizontal line. So your stop loss, so you enter somewhere here, right? So your stop loss is going to be, remember I told you your stop loss is going to be at the 200 period moving average, okay? So since you're selling, your stop loss has to be above the enter price. So you entered here to sell, you're going to set your stop loss here, should in case the market go in the wrong direction, right? To protect your account. So your stop loss is going to be here. Then your take profit again. Let me bring another line again. Horizontal line. So I'm taking my time to put enough value in this video, okay? So please just follow me to the end. So your take profit is going to be, now you set your take profit somewhere here. Why? Now if you look at this distance from here to here and from here to here are equal of length, or even the take profit is bigger. Okay, so this is one risking one to make one, or you can say risking 5,000 to make 5,000, or you can say risking 10,000 to make, depending on your lot size anyway. So you enter your trade here. Why you entering the trade here? You're entering the sell here because the MACD has confirmed price is going down. That's number one. Then number two, your moving average, which is your trend indicator, is telling that the trend, the momentum, the force is going down. So you place to sell here. So as you can see, the first 15 minutes the price went down, right? Second 15 minutes price went down. You're already in profit. The third 15 minutes, because each of these buys 15 minutes, the red candle, the price went down. You're already in profit. Then the fourth 15 minutes price went down, you're in profit. So you can see it gets very close to your take profit, but you do not actually get to hit the take profit, right? Then the next 15 minutes price went up, that means the profit has been reduced. Most traders, once they see that the profit is reducing, they will just close it. Now, most people do ask a question. Say, Emmanuel, is it possible to close your trade even when you have set take profit and stop loss, to still close it by yourself? The answer is yes. Yes, you can still close your trade even when you have set take profit and stop loss. So if you see, now this is your profit target, but the price is going up, that means your profit has reduced. So for example, from year to year, let's say your take profit is 10,000 naira, and then from year to year it's already showing 8,000 naira. Can you see close it at this point? The answer is yes. Now let's say the price has gone up, with this green candle, it means that your 10,000 naira has reduced to maybe okay, at this point 8,000 naira, let's say it has reduced to maybe 7,000 naira, and the next 15 minutes it reduced again to maybe 5,000 naira. At this point traders say, if I don't close it, it will reduce all my profit, so let me close it. Now you can still close it, and of course you're already in profit. But guess what? The perfect way of using this software or this strategy, which I'm showing you, is once you set your take profit and stop loss, your job is to just forget about the market, go and do other things, go and look for opportunities elsewhere. Remember, we preach multiple stream of income. So you can see it went up, and later, because of the momentum is really bearish, it later came down with full force, right, to hit the take profit here. Come on, and that's a profitable trade. All right, so if you understand that very well, we are looking at this on USD CHF. Okay, so I'll just do one more instrument, and then we'll be done. Okay, so that the video doesn't get too long. Okay, let me delete these lines here that I use for my explanation. Okay. All right, now let's look at another. So you can see the market keep going down, going down, going down. As long as these candlesticks are below this moving average, or your only job is to be selling and be making money. Or don't you like making money? You'll be selling and be making money. So somebody will now ask, Emmanuel, what about at this point? What should we do at this point? At this point, because the candlestick is still below this 200 moving average, right? But if you watch, it's not below our fastest moving average, which is the blue one here. So at this point, you don't do anything. You don't do anything. You don't want to take a trade that is very risky. You don't do anything. But what if this price move up and gets towards this moving average? Yeah, the 20 period moving average. This moving average will act as a resistance. So resistance is a place on the chart where we have more sellers willing to sell the market at a high price. Now, support is a place on the market where we have more buyers willing to buy the market at a low price. So, for example, as you can see, this is a double top. The price got to this point, got to the exact point, and the price has been falling for long. So this is a low price. Some buyers around the world will be looking at buying this instrument here. Okay, but for now, for this strategy we're using, we don't want to buy. We only want to take a trade that we are very sure is going to give us profit. Okay, so at this point you do nothing until it comes down again below, until the price moves down again below our blue moving average. Then we're going to look for sell opportunity again. So let me quickly show you Euro USD, and then we can now end the video. Okay, so let me go to Euro USD here. Now, Euro USD, open chart. Fantastic. So on Euro USD, same on 15 minutes, as you can see. Now, this is just 19th May. Okay, that was just yesterday, 19th May. So you can see clear buying opportunity. How do I know? Look here, please. Over here, we have the candlestick below the 200 moving average, right? Now, at that point, you do nothing. Okay, you do nothing. Now, once the candlestick move above the 200 moving average somewhere here, right? Now, that indicates a buy opportunity. Why? The candlestick, green candlestick, is above the 20 period moving average. The blue one is above our green moving average, right? This green one, which is 34 period, is also above our 50 period moving average. The red one, it's also above the 200 period moving average. So at this point, it indicates that the trend or the market is about to go in the upward direction. Then you also confirm with, don't forget to always confirm with your MACD. So something like this, at this particular candlestick. So this is the particular candlestick I'm referring to, this particular one, this one here, this green one here. Okay, so let me zoom in so that you can get it better. So I would love to zoom in. Okay, it's bigger now. Okay, so this is the point I'm referring to. So at this same point, you can see that the MACD has already confirmed bullish momentum. Why? The bars are above our zero line, and you can see this green line here is above the red line here, which is a bullish signal that price is about to go up. So at this point, you just quickly place your buy here at the close of this confirmation candle, this candle here. You quickly place your buy here, and then you put your stop loss just below the 200 period moving average, and of course you take profit above. Then you can see that yesterday the price moved up. You're in profit already. All right. So if you understand this very well, please, this is how to spot market opportunities. Now, for my chart, as you can see, there is a sell even here, right? And that sell is even in profit because this market has gone up very well. So I'm expecting a retracement to the downside, okay? As I'm expecting the market moving to the downside. Same thing happening in AUD US here. The market has gone up very well, so I am expecting now this one, this system of trading is absolutely for professional. This particular one, the price has gone up too much. I'm expecting a retracement. It's already going down. I'm already making profits, which is cool. Okay, all right. Now this is where we come to the end of the technical analysis. Okay, so my name is Emmanuel again, Emmanuel Odogu, Rally Academy. Okay. So I've been able to take you through how to deploy the technical indicators and also how to, so you can see we're already in profit here, okay? So, and also how to use these technical tools for a profitable, to cite market opportunities and also and to seize the opportunity and make more money for yourself. 2022 is going to be a great year for all of us. Thank you very much. Okay, so let's say you don't have other of my videos, so you can also always chat me up, okay? And also connect with me on any of on all of the social media platforms, okay? And also connect with Rally Trade on any of the social media platform. Thank you very much. Emmanuel Odogu signing out for now.